Hey, welcome back to Two Super Guys Trust Stocks. I'm Dylan.
And I'm Vinny. And man, oh man, has it been a rough week for those of us that own Chinese equities. We're going to talk about our favorite stock, Michael Burry's favorite stock, Alibaba, and how it's now at the center of maybe the next rung of this trade war between the US and China, which is just wild to be in that position. And I don't like it.
Not fun. It's not a fun position to be in at all.
No, it's definitely not. This is just like a screenshot from Google News. Just how many articles are being written right now. This is all in the last day, basically about the U.S.-China trade war. Like that is the topic of the day by far, and we're like squarely in the middle of that as Alibaba shareholders, which is not fun.
Yeah, and there was a question on your last Alibaba video on basically looking at the consequences of tariffs and how it wouldn't really affect Alibaba that much because the U.S. is such a small percentage of revenue. This is the answer. This is the risk, right? Because fundamentally, it won't affect Alibaba specifically that much, right?
Yeah,
They're going to do fine either way. But as an American investing in it, it makes it significantly more risky.
exactly. Yeah, that's my suspicion at least. So rough week overall for stocks. I mean, we're down 4.5% in the last month for the SPY, almost 5% for the triple Qs, and that's just in like I said, the last month here. It's a little bit worse when you look at Chinese equities overall, down 11% in the last month. Much of that coming, very short kind of end of this time period here as the trade war escalated. It's been even worse for us Alibaba shareholders down here, 21% now in the last month. Granted, we've been on like a significant upswing, right? So we're giving back a chunk of what we've already gained, but it's still not great to see once we were getting up to that 140s, and I was just hoping we were going to stay up there and chill for a while.
Right.
But yeah, we're right back down here into like the low 100 territory.
We're gonna decide buy more or get very scared.
Yep. Yeah, I'm going to talk a little bit about it at the end, kind of like how I look at it. So these are articles, like I said, from this week here. Kevin O'Leary, did an interview and he's talking about how the U.S. should just go ahead and get it over with, delist all the Chinese stocks, get them all off the exchanges. It's time to move this trade war up a notch. They're 500 to 700 billion dollars in market capitalization is his estimate there, amongst the Chinese equities that are currently listed on U.S. markets, and that we should just remove them all. Just be done with this. That they don't play by the same rules we do, and that he's competing for investment dollars against these Chinese companies, which have an unfair advantage because they don't have to play by the same rules. They don't have to have the same cost in terms of compliance that the U.S. does, U.S. equities do. So he's just being Kevin O'Leary, I guess. He really
Right.
cares about his own interest.
He also said that tariffs should be like 400%. I will say there is one risk that I just kind of thought of. So if they were to escalate this further and delist it, there's other things to think of that would have downstream effects that you wouldn't necessarily think of right now. For instance, a lot of things are made in China, and now granted, there is a lot of theories and some evidence that they do steal IPs often,
Yeah.
but they can essentially just say, "Well, screw it. You're going to do that. We're taking everything." Right? There's no one to stop them because if we
Hmm.
were to move everything out of China, it's going to one you can't do it overnight. It's going to take years. It's going to affect
Yeah.
manufacturing jobs. It's not like you could just like boom, everything's in India now. It doesn't work that way.
Hmm.
So there that's it, I don't think it's going to happen for that reason. Like right,
Yeah.
like we just found out that they changed the tariffs for essentially for Apple, right? That just happened like an hour ago from when we're filming. So Apple's gonna have a great day on Monday. Smartphones are now exempt from these tariffs. So
Yeah.
it's just I think it's negotiation tactics.
Oh, absolutely. Donnie T had to carve out an exemption for Tim Apple. He couldn't let that guy just be out there on his own after insulting him in such a way.
Jesus, nice.
Tim Apple. I'll never forget that. It's pretty funny. But it's nice to know that that's happening. They've been trying to divest from China for a while. There was a lot of early reports about some of the first non-China made iPhones and the quality control being significantly worse. I don't know where they stand with that because Apple's Apple. They're very secretive. They don't really disclose any of this sort of stuff.
Yeah,
But they've been working on it.
nice.
But it's not just kooks like Kevin O'Leary out here talking about delisting Chinese stocks. Scott Bessent, the Treasury Secretary, under Donald Trump now in this most recent administration, was on an interview on CNBC with Maria Bartiromo, and was asked what he thought about potentially delisting Chinese stocks, and he said it's on the table. It's certainly something we could do. So it's very much a possibility even amongst people in positions of authority, and it would be a major escalation in this trade war, because now we're moving just from changing the percentages on these tariffs here to actually having real life consequences for investors both on Chinese mainland and U.S. investors in these companies. So it could have a really significant kind of negative impact upon the economic trust between investors in both countries. So
Yeah.
we'll see. That one's a little scary. This harkens back to it was a other last delisting kind of trade period where we talked about a couple years ago under that
Yep.
Holding Companies Accountable Act. Now, what this article is saying is this could become like a boom for new IPOs in Hong Kong, and that there's in total, according to them, 286 Chinese firms listed in the U.S. Stock market with $1.1 trillion, according to them. Now, this is South China Morning Post, owned by Alibaba, so
Right.
it's kind of funny. You're almost getting their own opinion about this. It's like, well, this could be a good thing. I don't know if I truly buy that. There's a reason why you come to the American capital markets for capital.
Yeah.
And the reason why they're listed here.
You literally instantly lose capital. So I don't. Yeah.
Yeah. And then, there's also this kind of complexity here of it not being a very straightforward structure. This is an older chart here, but I just want to highlight, remember, as Alibaba shareholders in the US, we're actually owning, kind of these variable VIE structures, this, through a Cayman Island company that are allowing us to invest in a Chinese mainland corporation because they don't really recognize the foreign shareholders. So we're certainly in a position where we're at a legal disadvantage, if you will, which is very tenuous.
For sure.
So this is that law change back in 2020, that PAC AOB oversight. Do you remember I was talking about that?
We did a lot of videos on that. There was because that was back when delisting was like, oh, this might happen, and then they gave deadlines, and then there was all this stuff they had to do to fulfill the obligations, and I mean then it worked. So
exactly. This is part of Kevin O'Leary's kind of complaints, is that they don't follow the same rules, when in fact they have been since this act was put in place, and that the PCAOB has been able to actually audit the auditors for companies like Alibaba and all these 286 other U.S. listed Chinese companies since then. So this rumor circulated on X, apparently late day Friday, that they were going to be delisted. And this little blurb here from the article was talking about how it's very tactical. They put that out late in the day, so you wouldn't have a chance to actually verify any information. Everyone would just shoot from the hip, and the stock would just drop. That this is very much more in line with stock manipulation than anything else.
You mean like the tweet, that the fake story that happened on, was it like Tuesday or something? I can't remember. There was one day where we were tanking, and then all of a sudden there's a fake news article that went out, which was not real, saying, oh, the tariffs are paused, we're good. And then the market skyrockets up, and then turns out like, oh no, we made that up. That was not real. There's like it's like Reuters, there's like CNBC. It was like, what the hell? So this is, I mean, it seems like another one. This is how unethical people get great buy-in prices.
Absolutely. We are at a point right now where the up-to-date last-second news really drives the market price more than anything related to the underlying business.
Yeah, which sucks, right? Because people can just lie, like they literally did, and then the stock price will go up. You can have all these hedge funds sell, and then it plummets back down.
Exactly. So my thoughts in this kind of situation is you really have to know your own risk tolerance. Okay. This is why we have that discussion about like how much of your personal net worth do you want an individual holding here? Should you be trading individual stocks? There's like a million questions you could kind of pack into this. Personally, I still think Alibaba, certainly at these prices, is undervalued from a strictly business standpoint. And I still own it and plan to continue to hold it. But am I hungry and willing to go out there and put myself on the line to buy more of it and become more and more concentrated in my risk here? No, because if I get overly concentrated in the risk, and then I'm starting to see like what effect I could have on my overall portfolio, based upon like one random fake news article or a tweet from a high-ranking government official or a random guy like Kevin O'Leary all of a sudden, significantly impacts my personal net worth. I'm not okay with that. So you really have to kind of know what you're willing to tolerate in terms of day-to-day fluctuations based upon random news articles.
Yeah,
All
it
right.
sucks. It's not great.
Yeah.
I agree. This is a kind of a shit. This is definitely a weird week. No one can predict the next day right now. It's just
Yeah.
insane. No, I have no idea what's going. Well, Apple's probably gonna have a great day on Monday, but other
On
than
Monday.
that,
Yeah.
I don't know.
Yeah. And then the final thing here too is you can certainly look into a broker and see if you'd be able to hold the Hong Kong shares. Mine are held at Charles Schwab, and I know that I can indeed hold Hong Kong shares through Charles Schwab. So worst comes to worst, if I do get delisted, I can continue to hold them there. But it's not ideal, but it's certainly an option that would be available to me. So it makes me a little bit more tolerant of just riding the waves out, if you will.
Yeah,
So
makes sense.
that's my plan.
All right, guys. Let us know what you guys think in these troubled times.
Yep. Catch you next one.